what keeps me up at night? Everything.
But you're going to last night, however.
Everything keeps me up at night. I do feel a sense of urgency about the structural weaknesses that exist in money market funds, despite the fact that the series of rules we did to improve credit quality and liquidity were important and tremendous steps that we took in 2010 and clearly helped these funds weather a lot of the volatility of the European crisis this summer. There is a structural weakness that makes them prone to runs, and I feel like we need further debate and discussion around some concrete ideas there. I do worry about market structure questions. I think the flash crash was a huge wake-up call for regulators about the frailty of our market structure. I think we've done some very important things in that regard to bolster it and shore it up. There's more to do, and hopefully we can find time in our Dodd-Frank agenda to continue to do work in that area. At the end of the day, our markets have to exist for companies to raise capital, to create jobs, to build products, and for investors to be able to allocate their capital to worthwhile enterprises that they're willing to hold on to for the longer term, so the companies can grow and investors can share in that growth and profit. And to the extent high-frequency traders add liquidity, if they do, that's a great thing. It's lowered the cost of trading. If it provides liquidity, that's a great thing. We have to make sure the balance is right and that investors have a sense of fundamental fairness in the market and companies have a sense that they can go and have their stock traded in a place where it won't go from $40 1 minute to 2 cents the next minute, as happened on May 6th. One of the startling things to me about May 6th was that for every week, for about 9 months after May 6th, we saw net outflows from equity mutual funds. And I asked every CEO of a retail-focused broker-dealer who came through my office in that period, what are your customers saying? And the customers were saying we're on the sidelines until we understand what it was that happened that day that caused us to see stocks go from literally $40 to a couple of pennies. And that's a kind of risk investors should not have to bear. They should bear the risk of their investment. They should not have to bear the risk of whether the markets are functioning fairly.